Good morning, good afternoon, everyone. My name is Centeno, and today I will be your host. Welcome to this webinar, Technology as a Disruptor to Financial Crime, brought to you by Eastnets. Eastnets is a global provider of compliance and payment solutions for the financial services sector. Over the last 35 years, Eastnets has been working to keep the world safe and secure from financial crime. Today, its customer base comprises 750 financial institutions. Some of Eastnets' financial crime solutions that will be mentioned today include ChainFeed, which is a real-time blockchain solution for sanctions screening, and Payment Guard, an AI-driven solution for fraud prevention. Okay, so before we get started today, let me introduce today's panel. First, Saeed Patel. Saeed is the Group Product Development Management Director at Eastnets. Saeed is responsible for delivering solutions in compliance financial risk using blockchain and artificial intelligence. Saeed is based in London, and he has over 25 years experience working in capital markets, fintech, and regtech firms, from startups to tier 1 financial institutions. Saeed has held various leadership positions, including product strategy, global tech compliance lead, and CTO. Saeed has been a technical advisor to a number of European regulatory boards on market abuse and financial crime. Welcome, Saeed. Also, Seun Sotuminu. Seun is the data and AI practitioner at Eastnets. Seun is responsible for delivering AI solutions across all Eastnets fraud, financial crime, and compliance products, including supporting strategic AI initiatives from Eastnets' product and leadership team. Seun has close to 12 years experience working mainly as an AI consultant across many sectors, mainly financial services, and held various senior positions, including the head of data science and AI for a digital bank in the UK. He holds a Bachelor's of Science in Computer Science and a master's degree in Business Analytics. Welcome, Seun. And last but not least, Nelson Petracek. As Chief Technology Officer of TIBCO Software, Nelson helps shape the development of TIBCO's technology platforms and products. With over 20 years of experience, Nelson works to deliver solutions for the digital transformation age, drawing upon his deep knowledge of APIs, cloud, event-driven architectures, blockchain, and analytical applications. As technology evangelist, author, and frequent speaker, Nelson works with customers on the practical use of technologies and architectures and advises on various information creation and delivery patterns. He holds a Bachelor's of Commerce in Computational Science from the University of Saskatchewan. Welcome, Nelson. And okay, so let's get started here and talk about fintech companies, how they are driving the shift to digital transformation today, and what does that transformation mean to their efforts in combating financial crime and fraud risk. So Saeed, why don't we start with you, and if you can tell us your thoughts on that area.
Sure. First of all, thank you very much for hosting this event by TIBCO. Eastnets very excited to be participating in this webinar, and we very much see fintech companies being digital disruptors within this space of financial crime. Financial crime has been increasing in sophistication, with tech being used by criminals to counter the controls, traditional controls around financial controls around compliance risk and anti-fraud. And therefore, there's a new level of sophistication required. And we're seeing significant changes in the landscape. We've seen the rise of open banking, digital banking, neobanks, challenger banks, and also the move towards a more real-time instant payment solution within the payment infrastructure, which has opened the way for more sophisticated fraud, which is committed on an instant basis. And it means you need that level of sophistication to anticipate that type of behavior. We've also seen changes in the environment due to COVID. COVID has resulted a drive towards online banking, towards use of digital client onboarding methods to eliminate the need for face-to-face onboarding of clients. That in itself has posed challenges to traditional banks, but certainly fintech solution providers have come up with innovative solutions, including using biometrics for enhanced due diligence processes. Furthermore, fintech is providing, expanding its footprint to contribute towards the new technologies being adopted by consumers, such as social media, and being able to assess data through various social media platforms, including the dark web, to enhance their due diligence processes. So we've seen some great fintech firms adopt that. There's also a move towards real-time holistic compliance solutions. The need to have to bring data together from disparate solutions is really key. So the drive towards having, big data platforms to ensure that you're bringing together data from whether it's structured or unstructured data sources, being able to have flexible universal APIs where you can connect into the financial ecosystem, and then being able to provide that data through sophisticated means, whether it's BI dashboards, being able to use technologies, including artificial intelligence, and we'll talk more about that in a moment, for the detection of anomalies, predictive behaviors, using both supervised and unsupervised learning. And finally, blockchain is making a major contribution within the fintech industry to reducing financial crime. Smart contracts being adopted by countries to enhance their compliance processes, such as sanction screening, having real-time watch list monitoring based on the digital ledger technologies, being able to have the immutable security that comes with it, and the scalability and security of blockchain. And finally, around using network analysis tools to allow you to look at to have deep context insight around complex behaviors and transactions is a great way how fintech is being adopted to identify the complex patterns of financial crime.
Excellent. Yeah, no, great answer. You mentioned something towards the end, right, in terms of trying to understand complex behaviors, right, to identify anomalies, right, in terms of
yes.
Potential threats. But before we go a little bit deeper on that, let me just ask Nelson really quickly. We mentioned data movement, blockchain, analytics, etc., like data transformation, right? So a lot of areas that TIBCO does very well, right? So from TIBCO's point of view, what are some of the hot trends, so to speak, right, with fintech right now, and how does that correlate to Saeed's response?
Yeah, no, it's a good point. I mean, you're seeing this change now, whereas customers are expecting things to happen immediately, right? The shift towards more real-time interactions, real-time payments, real-time access to information through APIs and access to initiatives like open banking. But when you look at the way in which the financial sort of the models and the ecosystem is evolving, consumers are expecting to have much more information sooner, faster, better. And they're not willing to wait necessarily. And so what that does is it really shifts your need, especially when it comes to things like financial crime, AML, fraud, and so on. It shifts that need to also be much more real time. right? You no longer can wait and run that batch job at 3 a.m. that night in order to catch potential areas of fraud. I mean, those kinds of things you can't do anymore. You need to do it while payments are in flight being made. You don't have as much time to back that out, if you will. And so, from our standpoint, what we see is it's really a continuum of capabilities. So yes, you need to make sure that your applications are all streamlined, integrated, and have the ability to interact in real time. You need to make sure that you can do that in very much of a hybrid context. So, financial firms are moving to the cloud, and fintechs are definitely pushing and driving innovation in that area. But that doesn't mean you get rid of all your on-premise applications, as an example. So how do you marry those two worlds? And in many cases, there's a bit of an impedance mismatch there that you need to address. And then, you need to take analytics and incorporate that into those real-time streams, if you will, and into that hybrid environment, and then make sure you're managing all the associated data appropriately. So whether it's information sharing for the purposes of whitelists and blacklists, which I know we'll talk about here a bit further, blockchain can be one aspect or one element of that, absolutely. But there's also other elements of data management, data governance, data quality, and all those data things that you need to address. So the fintechs are really pushing organizations, as they expose more capabilities and as consumers and customers get used to interacting with financial institutions in that manner. You need, the legacy applications and the systems need to make sure that they get caught up. and so that's a lot of what we see, right? This evolution of how do I catch up, and how do I do so in a world which is much more real time and focused around areas like cloud and analytics.
Okay, excellent. Thank you for that. Yeah, so Sean, double clicking on that last comment from Saeed, right? Like trying to understand complex behaviors, right? So AI, of course, ML, these are technologies that can make a huge difference, right? In terms of trying to be proactive, right? And be ahead of the curve there. So, how are financial institutions leveraging these for such purposes, right? To battle financial crimes?
Yeah, very good question, Jesus. I think there's a couple of things we need to think about from a technology perspective. I think the first and the most important thing is, as we all know, fraud and financial crime is continually evolving. A fraudster will always continue to change their pattern, and that's how they try to kind of stay ahead. So as AI practitioners and evangelists, what we need to do is kind of stay ahead of the fraudsters as well. So I guess to that end, from a technology perspective, we need to be able to build machine learning models that evolve. Nelson talked about real-time models there, so that's very important and it's critical to kind of staying ahead of fraudsters. But the way the models learn as well need to adjust to the behaviors that is happening within the space as well. So I think as machine learning and AI practitioners, those are some of the things we need to kind of be ahead of as the dynamics is changing, as the environment is changing, as the behaviors are changing, as we're building all these real-time models. Our models need to be learning real time as well to adapt to these changes. I think that's the first point I'd like to share. And then from another perspective as well is when you typically look at modeling, there's two different aspects we look at things. We look at supervised learning, and we also look at things from unsupervised learning. One thing I've seen a lot of industries and financial institutions do is the over dependence on the supervised learning. And I'll just put a little bit of context there. Supervised learning is brilliant, but as we all know, with supervised learning, you give it an example and it learns how to do that perfectly. Meaning you kind of know what you're looking for, you give it to the machine, and the machine kind of learns that efficiently, better than a human, and quicker. But the unsupervised learning is an area which is, in my experience, is a little bit unexplored, because the advantage of unsupervised learning is we can actually catch things we don't know. So we don't need any sort of pre-labeling. We don't need to kind of say, okay, well, go look for this sort of things. We can just let the machine on the data. The machine recommends things to us. And then we have human intelligence as well. So fortunately, the human comes in there as well to help guide the machine and label those cases and say, well, this looks like this. And then we can move on to the supervised learning bit. So one thing we at Eastnets try to do is try to advise our customers to have that kind of chain flow. We call that collaborative intelligence, of starting with an unsupervised approach, having the human intelligence there to enhance and to enforce some of the recommendations from the unsupervised, and then having a supervised learning approach at the end of it. So that's one of the ways we are kind of saying, and the two key points I really want to talk about today, from using an AI and machine learning, especially in the fraud and compliance and money laundering perspective.
Oh, Jesus, you might be on mute.
You were right. Yes. I was saying, so just to give the audience a little bit of a better sense of how big this problem is, right? Like an order of magnitude. I mean, when we say financial crimes, money laundering, right, et cetera, right? Like whatever way you want to call it, but as a bucket, right, of you know, area of problems, how big this is, right, in terms of dollars.
Absolutely. I mean, the regulatory, first of all, the costs in terms of fraud risk with regards to attributed financial crime exponentially is rising year on year, and you're seeing areas of fraud and patterns in particular areas such as trade-based financial crime is significantly increasing. You know, using the transportation of and shipment of goods for money laundering. In terms of the cost of money laundering to world GDP, it's estimated to be between 2 to 4% of global GDP, just
Wow.
to put that into context. It is a phenomenally high number. It is very interesting to share with you that during COVID, if I take the example of the UK, the amount of fraud committed due to unscrupulous claims being made to the UK authorities had been identified as much as £40 billion in terms of fraud that was committed but wasn't able to be detected. So this is all that's really gone out of the system, and that's a huge cost to consumers. And it's very clear that you know, the fintech firms have got a strong part to play, and including government and state bodies with regards to monitoring financial crimes. So yes, it's a real challenge out there.
Yeah, no, for sure. Yeah, just out of curiosity, is cryptocurrency making things better, worse, or about the same, or?
Yeah, so cryptocurrency is certainly contributing to the complexity of financial crime out there, and certainly there's been a big drive in terms of regulators to put some level of regulation in place with regards to monitoring crypto activities from an AML perspective. And certainly, again, drawing on the experience of the FCA, they had recently extended the timeline for digital asset exchanges to register their ML system controls and processes with the FCA, because they have identified significant shortfalls in their controls. And so we're seeing really these new age technologies in terms of digital payments and cryptocurrencies really contribute in the rise of financial crimes. And it has meant a new way of thinking in terms of providing KYC and AML solutions in terms of being able to detect those type of activities. So certainly traditional conventional AML KYC processes are no longer applicable. And we're seeing the rise of blockchain as a solution with regards to being able to manage and trace, activities, including crypto. And I'll elaborate further as we go into this webinar.
Yeah, no, that's a great topic. Well, actually, yeah, let me then start with Nelson, then, just to get his take on this one topic that you mentioned at the end, right? So, Nelson, I know you're a blockchain supporter, right, and advocate. So, is blockchain the silver bullet to really address AML and KYC, or what's sort of like the the vision there for blockchain, right, in the next 12 or 24 months,
right,
in that area?
Yeah, I mean, like any technology, blockchain can contribute to the solution, but it's not the only solution, right? So, and that's going to be true on the analytics side. That's going to be true on any of the aspects that we've talked about. So, it's a contributor to the capabilities that you can bring forward in order to help solve problems related to, in this case, AML, fraud, and just generally speaking, financial crime. But when you look at blockchain, I'll talk about a couple of different aspects, and then hand it over to the other folks here to chat about as well. But you look at it, a couple of different elements make it interesting to help be a capability in this space. One is the ability to create really a decentralized business network over which you can distribute information, data in near real time. And so if I am looking to distribute whitelists, blacklists as an example, I can easily do that over a blockchain network, and so that everybody has effectively the same copy of all the data, and it's essentially up to date. And it can even be agreed upon, and it can be a sort of aggregation from multiple sources, if you will. So blockchain can be one means by which you distribute, in essence, what becomes reference data. Another element of this is the ability to incorporate business logic or smart contracts into your blockchain network, so that as you're distributing this data, as you're performing other types of actions with the information that you're either pulling or sending back to the blockchain network, you can then run some form of business logic against that information. And so the ability to embed these smart contracts and represent certain elements in code can also be very beneficial to approaches when it comes to AML and fraud as well. The last thing that I'll mention, and it's related, but it's, as you look at just the technology stacks in general, often blockchain can then be also used to augment what you're doing on the analytics side of things, especially when you get into things like, what model was I running at what time when this fraud was actually committed? Who was running that model? How was it trained? Against what data set? How did I manage that model? Was it produced via or in conjunction with synthetic data generation? There's all these different elements that you can use to help build a consortium that is not just sharing data, but also sharing the way in which the models themselves are built and derived. So blockchain can also play a role in that area as well.
Okay, excellent. Yeah, so let me ask Sean and Saeed your take on this, right? I mean, technology keeps moving super fast, right? So, and even though the blockchain is still, I mean, not necessarily new, right? But like, I mean, it's still sort of new for some institutions and why not? What comes after blockchain? I mean, what, from your side of the world, I mean, what do you see organizations that have mastered blockchain, right? Like, what is that they're starting to think as next steps?
Yeah, very, very interesting. And Nelson kindly mentioned about how blockchain is adopted in the area of AML sanction screening, and at Eastnets, we were one of the first companies to launch a blockchain solution around a real-time watch list, and that's had significant interest within the financial markets, largely because the sanction screening process has moved on from being a one-time daily event to moving more towards real time, and using technologies such as blockchain, which is has the security, the scalability, provides that assurance that you can provide a real-time solution which is robust out there. But certainly there's other areas that blockchain can be applied to within the area of financial crime. There was a recent study done by the US-based IDC organization around KYC and digital client onboarding, that they've identified that 10% of financial institutions globally will be adopting blockchain within their KYC client onboarding processes, and recognizing that there is real tangible benefit in using blockchain technology, not just around sanction screening, but the way you're doing profiling around individuals and validation of their identification from a KYC perspective. But also blockchain being applied around the monitoring of transactions, being able to trace back transactions to the source of funds, tracing the outgoing transactions to their final destinations. The blockchain gives you that scalability where there's no constraints around the number of entities, the number of transactions, compared to traditional fiat currencies. So there's lots of interesting use cases that blockchain can be applied to. And I earlier mentioned about the rise in financial crime around trade-based financial crime there. So that whole logistic chain, how documents, logistic documents, supply documents, shipping documents are managed, can be made a lot smarter using blockchain smart contracts. So the whole commodity business being transformed using blockchain technology in an area where we're seeing a huge amount of risk in financial crime. So that's a real welcome development of how blockchain is being used to try and safeguard and protect consumers.
Excellent, excellent. Yeah, well, we're almost at time here, so I guess closing thoughts. Saeed and Nelson, what's the easiest way to get started with each one of the organizations here when it comes to blockchain and the solutions that you offer?
I mean, from a TIBCO perspective, most of the blockchain work that we're doing is through our TIBCO Labs program, which is a quick innovation program for customers and partners. So really, it's just a matter of reaching out either through our website, or there's a TIBCO Labs at TIBCO.com that people can reach out to as well. But this is where we really collaborate with customers and partners around different areas of innovation and can help them understand where and how blockchain might fit in this context.
Excellent. And Saeed?
Yes, from Eastnets, we are very much a company focused on providing innovative solutions to capital market firms in the area of compliance, anti-fraud, and payment solutions. And those innovative solutions include AI and blockchain. Very excited to have products such as chain feed, payment card, which are we've seen strong adoption in the marketplace, and we'd be very excited to demonstrate and showcase our capabilities. We've got, we believe, a very compelling proposition to share with the financial community.
Excellent, excellent. Well, with that, we've come here at the end of the webinar. So Saeed, Seun, Nelson, thank you so much for your time. Everybody attending today, thank you, and have a good rest of your day.
Appreciate it. Thanks all.
Thank you, Nelson. Thank you, Tim.
Thank you. Take care.